The year 2020 has been a wild ride for cryptocurrencies, and the same thing can be said of people who invested in it, and even those who were just standing by on the sidelines and observing. If you don't have a strong heart, then cryptocurrency is not for you. Cryptocurrency is becoming mainstream, and more people are considering investing their hard-earned money in it. Before you reach into your savings and put it into the crypto market, you need to watch this video to the very end. In this video, we're going to talk about the things that could very well happen to the crypto market in the near future. But before we get into the video, don't forget to leave a like and subscribe to the channel with notifications turned on so you don't miss out on any of the new videos we post. So, what is cryptocurrency and what is it for? It's a digital currency that is created and managed through the use of advanced encryption techniques. It used to be only an academic concept, but was realized with the creation of Bitcoin in 2009. Bitcoin has been growing for a few years, but it's only captured a substantial media and investor attention in April 2013 when it hit a peak record of $266 per Bitcoin. Bitcoin then sported a market value of more than $2 million at its peak. However, a 50% plunge shortly happened thereafter. This led to a debate about the future of cryptocurrencies, especially Bitcoin. People are asking if cryptocurrencies are just a passing fad. A few economic analysts predict a significant change in crypto as institutional money enters the market. There's also the possibility that crypto will enter NASDAQ, where it'll gain further credibility. Some are even so bold as to predict that all it needs is a verified exchange-traded fund, or ETF. This would make it easier for people to invest in Bitcoin. However, there has to be a demand for crypto. The global health situation has affected every financial product. The global health situation has caused a lot of turbulence in the economy, and even cryptocurrency crashed, but it should only be seen as a temporary price correction. Such price corrections are part and parcel of every asset class. If you look at Bitcoin's year-on-year appreciation in prices, you'll be pleasantly greeted by a steady growth. 2020 was significant for blockchain and cryptocurrencies. Even in the face of economic meltdowns, it's remained resilient. Cryptocurrency regulatory actions will have an effect in the coming years. Numerous emerging markets have already made moves to integrate a variety of cryptocurrencies into their economy. Costa Rica, for example, has announced that employees can get legally paid in cryptocurrencies. This resulted in the spike of crypto in the country. The Philippines, a nation in Southeast Asia, is another country that has championed cryptocurrency. In 2020, the country's central bank approved almost 16 cryptocurrency exchanges, and this has placed the country at the forefront in terms of booming technology. In India, there's been a lot of talk about the regulations of cryptocurrencies, as the government is yet to issue an official regulatory stance. Experts are adamant that a lack of regulation in such a potential fintech area could result in plenty of black market dealings. The crypto community in the country has been looking forward to a positive law that will govern crypto and their dealings. So what's in the foreseeable future? The many limitations that crypto currently faces will affect its future. One of the most significant limitations is that your digital future can be easily wiped out in seconds if the virtual vault gets ransacked by a hacker. But this may be overcome through technological advances. What may be more difficult to overcome is the basic paradox that seems to hound cryptocurrencies. The more popular they become, the more government security and regulations they're likely to attract, and this will erode the fundamental premise for their existence. The number of merchants accepting cryptocurrencies has steadily increased. These businesses are still in the minority, though. For it to become widely used, cryptocurrencies first have to gain widespread acceptance among consumers. They're a bit more complex compared to conventional currencies, and this has discouraged people in using them. Crypto is more popular for the young and the technologically advanced people. A cryptocurrency that wants to become part of the world's mainstream financial system needs to satisfy a lot of criteria. Not only is cryptocurrency mathematically complex in order to avoid attacks by fraudsters and hackers, it must also be simple and straightforward for the general population to understand. It must also be decentralized, but must have appropriate consumer safeguards and protection. Above all, it must give the user anonymity without the risk of being used as a means for money laundering, tax evasion, and other illegal activities. These criteria are not easy to satisfy, and cryptocurrency could have attributes to fall in between heavily regulated fiat currencies. Bitcoin is the leading cryptocurrency, and its success or lack thereof when it comes to dealing with various challenges could determine how other types of cryptocurrencies may perform in the future. There will be competition from big tech. There might be questions about the things crypto has achieved in its decade-long existence. One thing is for sure, crypto has forced a lot of huge global entities to think about offering consumers an international digital currency. Everyone understands that there's a big market out there for digital payments, and payments that involve currency markets have the biggest potential. This is because currently, such transactions can take not only days to resolve, but also involve exorbitant fees. Bitcoin has demonstrated that a global digital currency can do wonders to streamline the process. Google and Facebook have embraced it and have moved forward with big digital currency plans. Although Facebook's Diem is not exactly the same as Bitcoin, it has the potential to eat a little into Bitcoin's growth. There will be continued volatility. Cryptocurrency has been through so much, but according to experts, volatility will continue. It's not connected to any only real-world phenomenon, so it can appreciate or depreciate in ways that are challenging to explain or predict. This is what makes crypto difficult to recommend as an investment, especially for people who want to avoid big losses. Some experts might say it could reach heights of as much as $50,000 next year. However, there's always the possibility that the price will head in a different direction. There's one thing that seems certain, and that's that the wild ride that has happened in the past year can easily repeat itself this year and in the future. This is where Elon Musk comes into play. The billionaire CEO of Tesla has been a major supporter of cryptocurrency. However, lately his stance has changed due to the environmental concerns over the increasing use of fossil fuel for Bitcoin mining. Because of this, Musk announced that Tesla would no longer be accepting Bitcoin as a payment option. What followed was a sell-off that led to a price drop. Since the crash, Bitcoin has rebounded over $40,000. However, Musk is still riding high on Dogecoin. There will be competition from central banks too. A report and survey issued by the Banks for International Settlements indicate that 80% of the world's central banks are in the midst of developing some sort of digital currency. China is in the lead, taking the experimentation further than any other country. The Chinese city of Suzhou, west of the metropolis of Shanghai, held a lottery that gave 100,000 residents 200 RMB each through a digital wallet. The recipients were encouraged to link their digital cash to their bank accounts, and if the digital money wasn't spent within a few weeks, it would disappear. As the country moves toward the nationwide adoption of digital currency, it might undercut the demand for Bitcoin and other types of cryptocurrencies. Some countries might also do similar experiments in the near future. Does it make sense to invest in cryptocurrency? If you're thinking of investing in cryptocurrencies, you should treat it as you would any other investment. It's a highly speculative venture, so you should recognize the risk of the possibility of losing most, if not all, of your investment. You must be prepared, and you shouldn't invest more money than you can afford. Cryptocurrency has no intrinsic value apart from what the buyer is willing to pay for it at a certain point in time. This is what makes it very susceptible to different price swings, which dictate the risk of loss for an investor. For example, Bitcoin has plunged from $260 to $130 within a period of 6 hours in April 2013. If you're someone who doesn't have the stomach for that kind of volatility, you should stay away from the crypto market, because it's not for you. Opinion continues to be deeply divided when it comes to the merits of Bitcoin as an investment. Supporters say that it has so much potential, but detractors say it's just another speculative bubble. Stay away from the hype. A lot of investors find themselves easily influenced by social media propaganda and provocative news articles. These things don't always provide the information you need to make wise decisions. Sometimes they can work against you and lead you to make imprudent trading decisions based on biased opinions that result in sure losses. You should only base your trading decisions on hard facts. Lastly, consider diversification. Do not put all your crypto coins into one label. Aside from Bitcoin, you should also look at other options such as Binance Coin, Ethereum, and others. Just as financial advisors recommend against putting all your eggs in one basket, you should also diversify for a healthy cryptocurrency profile. This will reduce losses in investments when sudden market fluctuations happen. We've come to the end of our video. Do you agree with the experts? What do you think of the crypto market? Let us know in the comments section because we want to know. In the meantime, invest your money wisely and stay safe.